So flat slightly to the positive. We're up 15 points on the day. We've got the US markets in positive territory. European markets are looking good. So we underperformed relative to what we see globally.
Although overnight, we saw Asian markets opening up very, very weak. I mean, they took a bit of a pounding after New York had a pretty dire time last night. I think what's happening is we're getting a bit of a realization creeping in that the US authorities particularly have to get some sort of exit mechanism in terms of their withdrawing all of this liquidity they pumped into the system. But every time they give any indication that that's going to happen, markets take it the wrong way and they start falling out of bed. Eventually it's going to happen. But I think in the meantime we may see markets coming off a bit as that realization creeps in. Once it creeps in, we'll get a kind of bedrock established. But I think later on in the year we'll probably see markets start normalizing a bit more when we realize that corporate earnings are going to be more aligned with fundamental economic growth, particularly in the US. And that is not the case at this point in time.
Okay, I mean, the point is that we know the markets are actually forward-looking and they price in what they expect on the economic front. And some are very concerned about earnings. And we see it on the PE ratios on the resource stocks in South Africa because we are concerned about Chinese growth in particular. Are we being too cautious?
Not necessarily. Look, I think Chinese growth is going to be an awful lot less than it has been last year, the year before, and the year before that. But having said that, if we get 7.5% to 8% growth out of China, it's actually still reasonably good off a very, very high base. Demand is going to come off. We know that. I think that's factored in. I mean, how cheap do you want these commodity stocks to go? Because they're pretty cheap. But what I'm saying is, I think it's not just China. It's the US. That is still the world's largest economy by a long margin, by a big margin. And unless and until there are really tangible signs that is gaining traction, sustainable traction, then I think markets are going to be a little bit weak. You mentioned earlier Alcoa, and everyone's saying what a great result it is. But still 70% lower than it was this time last year. Yeah. So in fact, it's not a great result at all.
I think I used the word upbeat.
Yeah, no, most people see this as being a good result. Yeah. But in fact, it's actually not a good result at all. And corporate earnings growth in the US, which has been fantastic for the past 3 or 4 years, now, if you strip Apple out of the whole equation, it's going to look very lackluster indeed. I think first quarter earnings growth will be barely positive.
And if Apple, of course, disappoints, that would be quite dire for the markets.
Yeah, I mean, we're looking for at least 50% of it.
Yeah, we are. Okay, let's touch on the South African markets. Anglo Gold is up over 3% today. Goldfields also in positive territory, up almost 2%. Harmony looking good, up 1.5%. We're looking at the gold price, nothing shooting the lights out today. But as you mentioned off air, it's all about the rand.
Yeah, the rand took an absolute pounding. The rand is seen as being a proxy, for emerging market currencies and commodity currencies. So as you get a stronger dollar, conversely, you get a weaker rand. That's obviously, I think, the main factor impacting on those commodity-based stocks. Yeah.
Are you a buyer of gold mining companies?
No, we never have been. For one simple reason, we're not particularly interested in getting involved in companies that have such huge cost increases coming through. Yes, we're moderately bullish on the gold price, and that is why we have an exposure to gold via the gold ETF, which in our opinion is a nice clean way of getting that exposure to gold without necessarily getting bogged down in all the security issues, the safety issues, the depth issues, and the cost issues with gold miners per se.
$5.1 billion buyout of De Beers by Anglo American. It's been approved by the competition authorities. A new era, would you say?
Yeah, and I think all credit to the competition authorities for actually doing this so swiftly. You might have said, well, it's a slam dunk, it had to happen anyway. But that's not the point. The point is there was a change in control from the Oppenheimers back to Anglo. They've been associated for the best part of 100 years. And I think, given what we had with Walmart, for example, that long, tortuous 18-month process, I think this thing, it's a big deal, but nevertheless, it went through very, very quickly and seamlessly and very nicely.
Let's also touch at the bottom of the top 40. Truworths under pressure, down 1.5%. SAB also down 1%. In fact, we saw the overall industrial sector under pressure today. Usually we see industrials doing far better than what we see the resource counters as an example. Are we going to start seeing the cyclical rotation that we keep talking of out of industrials into resources and into financials? Not
necessarily. Look, I think you mentioned a couple of stocks there. Look at Truworths, for example. I mean, it's a fantastically well managed company. One of the problems we do see with retailers at this point in time is if you look at the inverse correlation that exists between retail sales growth and prime rate. If we're looking at prime rate moving up by about November this year, which is what Absa Capital is looking at, then the inverse correlation says to you that retail sales growth may well start coming off at that point in time as well. And if that's the case, some of these more highly rated stocks like Truworths, I think may take a little bit of pressure. It's not going to happen just yet, but you know, they are highly rated, most of these retail stocks, and thus could be a little bit vulnerable to the possibility of higher interest rates.
Any specific companies that you've been buying recently, apart from the JD Group?
No, Sasol.
Sasol
Looks absolutely fantastic.
Okay.
And I think SAB Miller, although it's expensive, 27 PE, it's not cheap. But if you look at its prospects, they look very good to us.